Dr. C.K. Narayan, founder of Neo Trader, with us on the show. Dr. Narayan, great having you. Thanks for taking the time out. And I read your columns with key interest, but I'm afraid the market, the way it is right now, any form of conversation around supports gets washed away the next morning itself. My question though to you is, are you now playing, Dr. Narayan, for any kind of a bounce because the market seems oversold, or would you wait for the action to come in first?
Good morning, Neeraj, and nice to be back. And of course, everybody in the market is looking for supports, right? And they are acting on it. So there is a frequent bounce, and the market has actually been in a range. Yesterday was a bit of a sharper fall. But if you really look at it, what have we done? We have fallen about let's say about 1250 points in this month. And the monthly ATR range, if you look at it, these days has become much larger. And the monthly ATR range is about 1285 points. So it's on par with what you could have expected. So 1250, 1284, nothing much to give or take. Even on the weekly range that you can expect, say about 515 points is the current projected weekly range. And we have done about 450, 460 points so far. So from that perspective, if you see it, what the market has done seems to be normal. Now, coming to the point of whether we have reached support zones and all that, now support zones can be marked in plenty on the charts, but the key thing is, will the market bounce off it? Now, you may put 200 DMA in its pathway, you may put some trend line in its pathway. So if you take a long-term trend line that comes to somewhere around 24,400 to 24,600, that is still a decent level away. So if you take, let's say, a small double top formation of having formed at the recent highs, then the target for that comes at around 25,000. Now, so I mean, therefore, if you look at it from any angle, the market is oversold. There is no two doubts about that, and it is nearing some supports. What it really requires is something to jog it out of this, and then that has to be in the form of some good results. So results have still been mixed. So people have anyway been spooked by Trump tantrums all through the last 1 year, and now that has become the norm. So we are looking at other things to produce this kind of upside. And right now, what we have is the quarterly numbers and a hope as far as the budget is concerned. So these are the two events which can kickstart some kind of a meaningful up move. And that too, at the moment, having broken all this, you will now find that 25,800 will be a difficult resistance to cross. So I think we are caught in a new range now that is on the lower side.
Okay, so that's with regards to where, what levels you're looking at. Mr. Narayan, good morning. This is Hiral on this side as well. You know, a couple of things that I was looking at. You spoke about the RSI on Nifty 50. Now, it's below that 30 level for the first time since March 2025. And a similar trend is what we are witnessing when it comes to Nifty Realty, Nifty FMCG, Pharma and Energy. So there is an indication that we are probably in that oversold zone across as well. Where do you, I mean, from here on then, what is it that you would watch out for?
Well, the first thing I would watch out for is for some indication that yes, we are forming a bottom. See, reaching oversold does not by itself or automatically guarantee that we will rise from there. A rise requires buying to come in, and always buying needs to be stimulated by some reasons. Till the market finds some good reasons, all you will have is a kind of a bounce, which typically in a jargonistic way is referred to as dead cat bounces and all that. So those don't help unless you get some good, decent results, which will shake the market out of its ennui. And I think it may be difficult for the market to show anything other than an oversold pop. Oversold pops cannot really be invested into, they can be traded into. Now, how many people can do that? That is up to question.
Okay, so Mr. Narayan, from here on, you know, in terms of key levels that you would be watching out for on Nifty and Bank Nifty, what does that look like? Because, you know, I mean, VIX is already coming to levels of 12 and 13. You are seeing a little bit of uncertainty that's creeping in as well. You are in that oversold zone. So what should anyone watch out for, and do you think this could be the right time to start nibbling in?
See, Bank Nifty has been faring considerably better than the Nifty during this recent, let's say, couple of weeks or more. But then Bank Nifty, even though it pushed up to new highs, it's now back into the range that has been going on for the past couple of months. So the lower end of the range is at about 58,700, 800. So that is the lower levels that you can look at as far as Bank Nifty is concerned. On the top side, 60,000, 60,500 is proving to be a little bit of a formidable resistance. So again, just like the Nifty, the Bank Nifty now has got into another new range, but it still remains better play than the Nifty. And therefore, I would look to Bank Nifty to lead the market out of this morass. HDFC Bank, to its credit, seemingly doing better. ICICI Bank had done well, but then that is undergoing a bit of a pullback. PSU banks are doing fairly decently. State Bank is doing well. So if you take SBI, ICICI Bank, and HDFC, and if they don't really crap out, and you have supportive roles coming from the likes of AU Bank, excellent results which came out recently, Federal Bank, great moves post results, and RBL Bank, etc., which are in the throes of some uptrends. I think the banks are decently positioned to jump up from the supports. So I would be looking for the banks to lead the attempt to go up if one were to occur.
So, Mr. Narayan, Narayan, this is with regards to banks. Any other topics that you could be watching out for, taking the charts into consideration?
Well, I think metals, auto, these are the things which have been outperforming the overall markets, right? So metals largely, if you look at Hindustan Copper and Hindustan Zinc, they are following the trends in the metal. And I think every dip in that is a good level to buy, because I think silver is not showing any signs of exhaustion, and that should drive Hindustan Zinc prices. VEDL has triggers of its own with the split and relisting and all coming up, and that is that's the best widespread play within metals. Hindustan Copper, I think if you look at copper charts, they are still looking pretty spiffy. So I think declines in copper also could be a buy. Steel, I think, has been a bounce largely on that protectionist duty which they applied, and that may have pretty much played out, because if 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 you look at the charts of, let's say, steel flats long future, I don't think that is wearing a bullish picture. So I would leave. I would stick with the more with the base metals and then gold and silver.
Okay, so that's with regards to where base metals are concerned. Topics coming in from CK Narayan as well. Thank you so much for joining us, on NDTV Profit.